Hello traders, welcome back to the Forex Geek. In today's video, we are going to explore a powerful approach to Forex trading that can lead to a substantial profit while reducing stress and screen time. It is called the long-term Forex strategy. Offers a unique perspective of the market, allowing you to capitalize on major economic trends and currency movements. So by the end of this video, you would understand the key components of successful long-term trading and learn how to develop a robust trading plan. So stay tuned as we discover how we can leverage fundamental analysis, technical framework, and disciplined risk management to achieve your Forex trading goals. So we'll start by understanding the power of the long-term trading. The long-term Forex trading offers a distinct advantage over the short-term approach. By focusing on holding positions for extended periods ranging from weeks to months or even years, traders can capitalize on specific market movements driven by fundamental factors. This strategy allows for a more relaxed trading experience, reducing the need to constantly monitor the market, potentially monitoring and flow and excuse me this strategy allows us for a more relaxed trading experience, reducing the constant market monitoring and frequent decision making. One of the primary benefits of the long-term trading is the potential for large profit targets. As positions are held for a longer duration of time, traders can aim for more sustained price movement, potentially leading to a higher return. This approach also provides a buffer against the short-term market volatility, allowing traders to weather minor fluctuations without being shaken out by their position. As we can see from this chart, we can see this is a long-term, this is a daily time frame showing a long-term trading opportunity. In this area, we can see price move the total distance of approximately, this is approximately 1071 pips. This is the price movement for this range. Now let's check this on the lower time frame to see if it will be as smooth as this particular area we marked. If we go to the 15 minutes time frame, we'll be seeing a different thing entirely, because it shows us a little bit of more market noise, price fluctuations, and indecisiveness in the market. It wouldn't be a clear market pattern like we saw on the higher time frame. Looking at this here, we can see the packets, this particular area we monitored in the higher time frame. You can see a lot of price movement, fluctuation up and down, sideways movement, ranging market just within this area that showed us a clear market direction on the daily time frame. So this is the power of focusing on a higher time frame. Another key advantage is it reduces time commitment required for analysis and trade management. The long-term traders can focus on either the weekly or the monthly charts, conducting thorough fundamental analysis to identify strong and sustainable trends. This approach often leads to a more balanced lifestyle, as traders are not tied to their screen for an extended period each day. Long-term forex strategy also tend to align more closely with major economic shifts and currency valuations. By focusing on the microeconomic factors such as the interest rates, the GDP growth, and political stability, Traders can position themselves to benefit from sustained currency movements that occur over time. See the movement of this chart, how clean it is in the daily time frame, but if you look at the lower time frame, it will show a lot of price movement that will be very difficult to pick out from. So let's see how we can implement this strategy. The foundation of this approach lies in the thorough fundamental analysis combined with a robust technical framework, beginning by identifying currencies with strong economic fundamental like the GBP USD or the GBP AUD. These are currencies that have strong economic growth and political stability. Once you have established a fundamental bias, use technical analysis to pinpoint optimal entry points, focusing on the daily or the weekly chart to identify major trends and key support and resistance levels on the chart. These are areas where we are expecting price to react from. These are our key resistance and support areas on our chart. Remember, position sizing and risk management are crucial components of long-term trading. Given the extent of holding long-term periods, it is essential to use wider stop losses. If we are to capitalize on a trade using this higher time frame, we have to position our mind to use wider stop loss to accommodate price or market fluctuation. However, this necessity can be with smaller position sizes to maintain an acceptable risk level. We have to always calculate our position size based on our account equity and the distance to the stop loss area. If we are to enter a trade at this point, when market broke this structure and came to retrace, if we are to enter at this point, we have to calculate our position size that will suit this stop loss, this 138 pip stop loss, in such a way that we are not risking more than 1 or 2% of our trading account, and our profit target will be a good zone. We would gain tremendously from this trade. When implementing your strategy, consider the potential of impacts of swap costs. When trading this strategy, always remember that you have to accommodate swap costs. For position held overnight, some currency pairs may often return a positive swap cost, mostly the euro pairs, the dollar pairs. Those are the pairs that the swap cost might be a positive return. This can be beneficial for a long-term holding trade. If you are trading for a long-term position, this positive swap cost can be of benefit to you, while others may incur significant losses over time. Because you are trading this strategy on pairs that you have checked their history, you will be able to capitalize in a profitable way, gaining from the positive swap fees. Factors this cause into your overall profit calculation and adjust your position size accordingly. We have to keep in mind all these little commission or swap costs so that we can add them to our position size when calculating it for each trade we want to take. Now let's see how we can enter a particular position. Since this is since this is exactly our daily time frame. Let's see how we can capitalize on a trading opportunity using this our long-term trading bias. We look at the overall market direction when analyzing, and I can see that the market is trending to the up direction, making series of highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's trending up in the up direction, in the high direction, proving to us that we are in a sustained uptrend. If we zoom in, we can still see that yes, we are trending to the up side because the market is making series of higher lows. So if I want to capitalize on such a position, I can use my Fibonacci retracement, draw it from the low to the swing high. This is a present market price action that I'm trending with. I'm expecting to enter my trade in this sweet spot, the 61.80 region of the Fibonacci retracement, and I will wait for my candlestick pattern, my bullish candlestick pattern, before I enter my position. Or we can use other blocks. You can decide to enter your position when price gets to your other block, as the case may be. But in this trade, let's make use of our other blocks. When price comes to our other blocks, we can decide to take a trade at that area. Remember, do not forget to impute your stop loss. Trading without stop loss is like trading to lose your full account equity. So you always put your stop loss at a recent swing low, below the recent swing low. Your profit target, you can target the next swing high, or you can target 1:5, 1:2, as the case may be, but I'll go for the recent swing high. So this trade is a long-term trade because I'm not looking to come in and quickly leave the market in a short time. I'm trying to leave this trade to run for at least 2 weeks, 1 week, as the case may be. So if I allow this trade to run, you can see market is going in my direction, and before you knew it, we took our profits at this area. So we have to develop a clear, you have to always remember to develop a clear entry criteria that combines your fundamental analysis with your technical confirmation. Look for alignment between the long-term economic outlook and technical indicators on the higher time frame. Consider using multiple time frame analysis to identify high probability entry points within the border trend. Like this trade we took, we can still go to the 4 hour to refine our entries to get a better entry position. We can look for areas where market decides to break structure in the lower time frame. As you can see, price broke structure here. We can decide to enter where price broke the structure, and I'll put our stop loss just below that low. We can refine our entry in so many manners. Let's not forget, exit strategy is equally as important in long-term trading. Always set realistic profit targets based on historical price movement and key resistance level. Implement trading with a trailing stop loss or using a technical indicator to determine when to close part or all of your position as the trade progresses. Alright traders, we have come to the end of this video. Long-term forex trading offers a powerful strategy for those seeking to capitalize on major market trends while reducing stress of screen time. By focusing on fundamental analysis, implementing robust technical framework, and practicing disciplined risk management, you can potentially achieve significant profits in the forex market. Remember, success in long-term trading requires patience, thorough analysis, and the ability to withstand short-term or short-term market fluctuations. As you incorporate these strategies into your trading approach, you will be better equipped to navigate the complex world of forex trading. If you found this video helpful, do not forget to like and subscribe to our channel. Don't forget to turn on the notification bell to stay updated on future forex insights and strategies. Your support helps us to continue providing quality content to assist you in your trading journey. So until next time, trade wisely and stay focused on your long-term goals.